this. You think this is the real Quaid? It is.
Hello everybody and welcome back to the channel, and today's video, which is going to be the part 2 of our series where we are analyzing NEL, the Norwegian company. If you haven't seen the part 1, we would definitely urge you to see that, because we see it as kind of like a prerequisite to understand what we're going to discuss in today's video. So you will see here a link to it, so go and check it out if you haven't already done. So to this part 2 video, we thought it would be good to start off with what we would consider as NEL Strategy. So they have first here accelerating investment in organization, technology and partnerships to maintain leading position in a growing market. This is something that we will come into more details in this video. Continuing development investment in alkaline and PEM technologies, as well as technologies to support fast and reliable hydrogen fueling for heavy duty application. This was something that we already touched upon in part 1. We mentioned that things needs to become better, it needs to become bigger, and that's NEL's ambition for the products that they're marketing as of today. And finally, they have the key markets show strong momentum with ever larger projects. NEL needs to be a financially strong counterpart to meet its delivery and performance commitments as a much larger entity. And this is definitely also something we're going to investigate and illustrate in today's video. Building scale capacity to accommodate to multi-billion NOK revenue, Norwegian crowns, capacity, and investing to maintain leading position. We also showed that in the previous video that within the electrolyzers, NEL is the biggest company as of today, but there are coming new companies into the market, and NEL therefore need to be on top of their game if we want to maintain this position, and we're going to illustrate some of these companies later in the video. They want to hire more than 100 new employees in 2021. This year. They want to deploy 25% of capital raised in 2020. This is also something we're going to touch upon in this video, in planned equipment and technology development projects in 2021. They will add more capacity as required by the market. We illustrated that in part 1, where we showed the manufacturing capacities that they have and what we are seeing both on the PM side, but definitely also on the refueling stations, that they have spare capacity that can meet an increase in demand. And then finally, ramp up, resulting in significantly negative EBITDA in 2021. So basically what they're just saying, we're going to spend a lot of money to grow in the future, but this will impact the results in 2021. So it's just kind of like a heads up for the investors. So first we thought it would be good to take a look at the financial position, and here the results are showed in Norwegian crowns million. And for people that are not familiar with the currency of the Norwegian crown, 1 USD is approximately 8.66 Norwegian crowns. So as you can see from the table, we here have 2018, 2019, we have Q2 2020, we have Q3 2019, and we have Q3 2020 here, and the adjusted numbers for one-time off expenses, I assume it is. We actually think that it would have been fair for NEL to take a few years further back, because one thing is, for example, the operating revenue. We can see there was a clear increase from 2018 to 19, and this is actually a similar trend that has been for the last couple of years. They have had consistent revenue growth. And although the year is not finished for 2020 in terms of them reporting their financials, we actually expect that they will beat the 2019 result in 2020, so this will continue. What we can also see here clearly is that expenses have gone up, and this is also something NEL has clearly said to the market. We are to invest in our organization, in our technical capabilities, and in our R&D. So definitely operating expenses are going up, and they will also this year increase more than what the revenue has increased. So you'll basically have a bigger gap between expenses and revenue, but this will hopefully be a short-term thing, and in the future we expect that the revenue will start increasing significantly. This is something we are going to also show later in the video, and we have great expectations for the revenue growth of NEL going forward. And the EBITDA, as we just mentioned before, again, here we have said right now it seems stable, but during 2021, NEL expects to have a bigger loss EBITDA wise, and that will obviously impact the remaining here EBIT, the pre-tax income and the net income, which we should also expect to become worse in 2021, but they see this as a temporary thing. And this is why it's obviously very important that they have sufficient cash to keep the business running while they are burning the cash. And therefore, as we will illustrate later, NEL has raised a lot of equity in 2020. And basically they have a cash balance here on 2.5 billion Norwegian crowns. So they are in a very good situation from a financial perspective. Their balance sheet is relatively strong compared to how much money they're burning. So again, there's no concerns from our side as to what they have available of cash. And we would actually think that they may take the opportunity in the recent increase in share price to actually raise more equity. We saw Plug coming out with an announcement yesterday that they're going to do that, and we expect some of the other hydrogen fuel cell companies are going to follow suit and are going to raise cash while the share price are as high as they are at the moment. So again, just to illustrate a bit the cash situation and what happened during 2020 was that NEL took an opportunity with increase in share price to raise more capital, and they did that over a few different instances. What is actually interesting is that this subsequent offering of 127 million Norwegian crowns, which was by far the smallest of the three of the equity raises that they had, they actually cancelled that because the share price plummeted after that. And that's obviously what's going to happen when you're going to ask for more money in the market. It is going to dilute the value of the shares. And again, for that particular situation, the market was not happy and NEL actually decided to cancel this. However, with the recent increase in share price over the last month, it may incentivize them to do one more round of that. So we could foresee that there will come a capital raise during 2021 for NEL. And as said, NEL is definitely not laying on the lazy side in terms of this money. It needs to go out and it needs to be spent. And one area where they are significantly growing is in terms of staff. So we can see here the alkaline product line growth from 2018 to 2021. They expect it to be 3.5x since 2018. So NEL is definitely investing in people to be ready to meet the future demand that they are seeing and the projects that they are going to have. So again, this is another reason why the expenses are increasing with such a high pace and why they expect the EBITDA to be more negative than usual in 2021. They're simply investing in the organization, and this is not just the case for the alkaline part, it's also for the PM and it's also for the refueling station. And they want to build core competencies, and they also want to recruit the best brains from other industries. So again, this is necessary in what we would consider a rather technology-driven company. You need the best people out there if you want to be the best. So it's good to see that NEL is focusing on growing their staff numbers to both meet demand, but also to perhaps become better in the future. Another interesting area where they're actually spending some money is an investment in other hydrogen companies. And in the two particular cases that we have here, it is actually customers of NEL. So one of them is Nikola Motor Company. I don't think they need to be introduced any further to a lot of people. They have a small position there of $20 million. Then they have Everfuel, where they have much more, $200 million approximately. And again, these are customers to NEL, so they're kind of like integrating across the value chain of hydrogen services. So quite an interesting aspect. And obviously, the results of NEL is also somehow impacted about how these companies perform and nonetheless how their shares are performing. So it can be a bit volatile with some of them, which could mean that you could have some negative impact on NEL accounts if it doesn't go well with the shares of these companies. So a quite interesting dynamic that we thought was interesting to illustrate. Now we come to the backlog section part, and this is perhaps the most interesting section in this part 2 video. If we take a look at the order backlog growth quarter by quarter, we can see that in Q3 2018, the backlog was just south of 400 million Norwegian crowns. Less than 2 years after, this was up to more than 1 billion Norwegian crown, so significantly growth. Obviously, this does not mean that all these projects are going to materialize. Some of them may be cancelled, but it's still substantial growth that NEL had experienced in 2020. Then, from Q2 to Q3 2020, they saw a drop of 9%, and you may wonder, okay, maybe they're stagnating, maybe this was the top, but no way. We have expectation for significant backlog growth moving forward, also for Q4 2020, and we're going to explain to you exactly now why this is the case. So let's take a look at some of the deals that has been announced in Q4 2020. And keep in mind, the backlog as of Q3 2020 was around 900 million Norwegian crowns, which could equate to somewhere just above 130 million US dollars. First, we have a small deal here. A hydrogen fueling station for buses were purchased, a contract value of approximately $2 million, so not significantly high, but still an order. We had another one for purchase for 2 more refueling stations. The value of this was 3.9 million, so obviously a bit better. Then they came out with a quite big announcement, up to 50 megawatt electrolyzers to support fossil-free recycling steel production in Norway. The estimated value of this contract is $22 million, so it was a quite big contract for them. Then we have another one, which is probably the most interesting one, at least according to us. It was with Spanish Iberdrola, where NEL is going to deliver a 20 megawatt PEM electrolyzer solution. And this one was in final negotiations last year, but it has been closed last week. And we see this as a huge catalyst for NEL because Iberdrola is a huge renewable company. They have a market cap of more than 76 billion euros. It's a huge company. And if NEL can have success with them, this could mean that there will be expanded business opportunities in the future. So this is definitely an area where they need to deliver. The contract has a value of $16.3 million. So you already see now where we're going with all these deals in Q4 2020. But it's not done. Then they were awarded a contract by Everfuel. That's the company that they have invested in, as we just talked about before. This is for a hydrogen project in Denmark, $8.7 million in this one. Then they got an order for the US Navy for PEM electrolyzers, a contract value of 5.4 million. They got another one, 1.5 PEM electrolyzer for a large industrial client in the US. And then finally, very interestingly, they got an order on multiple hydrogen fueling stations in southern part of California in the US. So until now, NEL has been focusing on the northern part of California, and now they're also entering the south part of the market, and this has a value of $19 million. So if you just look at the orders that have been announced, and we may actually have missed some of the others that have been announced, and there's obviously also others that they do not disclose, well, we are looking at a total of around $80 million just in orders in Q4 2020. That is massive when you look at the current backlog. And this is a clear indication that their business is growing. They will have more revenue in the future. They will have a lot of more different type of customers. I mean, it is a quite impressive quarter that they have had, and this just gives huge promises for the future. So we are quite excited to see all of these announcements that they have made. This is something that we have criticized other fuel cell or hydrogen companies for. Their project backlog, their revenue does not seem to really been increasing, but NEL is actually delivering that year on year. And this is really one of the key differentiator from them and some of the other companies that we have investigated so far. So again, not to spend too much time, but they will most likely add more than 600 million Norwegian crowns to the backlog in Q4 2020. Obviously, there will be part of the backlog that has materialized into revenue, but this is what we are expecting, at least based on the announcement that we have seen in the recent months. Then we can go to the competitive landscape, and as we showed in the part 1, NEL as of today is the world's largest electrolyzer manufacturer and with quite a far margin to number 2. However, there's definitely competition out there, and this is also increasing. You have Bloom Energy, which we covered in a separate video. They want to make electrolyzers. You have Siemens who are entering the market. You have Cummins, another huge company, obviously like Siemens, that have done acquisitions within the hydrogen area. You have Sun Hydrogen, which we do not know too well, but what we understand is that they're working on a complete new technology that may or may not be able to compete with NEL. You have ITM Power, who also do electrolyzers. We covered them in the top 4 video the other day. And you have McPhy, which also does electrolyzers. We do not know a lot about them, but it's just to illustrate that there are competitors out there and there are new companies entering the market, and that is why NEL cannot stay passive. That is why they need to invest in technology, they need to invest in people to stay ahead of the game, because otherwise this leading position will vanish in the future, and obviously that's not what NEL wants. So again, just to give you a flavor of the competitive landscape that they're experiencing as of today, and obviously we expect that this will increase in the future, no doubt about it. Then we thought it would be interesting to take a look at some of the targets or mission that NEL has identified where they want to go from 2020 to 2025. We're not going to spend a lot of time on this because we've already covered a lot of them, but obviously they want to be doing the operations in a safe manner. They want to do capacity expansion. We have covered that. They want to scale the capacity and the efficiency of both the alkaline and PEM products. And they want to decrease the cost of hydrogen to USD 1.5 per kilo. And they have a lot of different ways that they believe that they can achieve this result, although it is very ambitious. But in the end of the day, they want to get on parity with fossil fuels. So this is in terms of world-class safety and scalability and cost leadership. The next one is technology Fundrunner and preferred partners. They want to be the #1 refueling company in the world. And as you saw, over the next 10 years, huge growth is expected to happen within the refueling stations worldwide, and currently they are sitting on around 20% of the global market. They want to be the biggest one on alkaline and PM as they are today. Increased competitions will definitely happen, but if they can continue to improve the product offerings, we are actually pretty confident based on their expertise, knowledge and skills over many decades that they can retain this position. And obviously they want to strengthen their position as the preferred partner for hydrogen technologies with specialist competencies in key segments. One of them is obviously related to the refueling stations, where they want to make that even faster and increase capacity as well. Finally, they have the strong financing and the global presence. We have touched upon these in the videos. They have a strong cash position as of today. They may go out and ask for more money in the market in 2021. We wouldn't be surprised if they do so. They want to become a profitable operation. And, you know, this was one of the criticisms we had with some of the other companies, more specifically Fuel Cell, where the management were in doubt whether they would ever become profitable. That is definitely not the case in NEL. They want to become profitable by 2025. Whether they're going to succeed is not a guarantee, but it's one of the things that we really like, that they have a clear ambition of where they want to be in 2025. It was the same thing we saw when we analyzed Plug Power. They have a clear vision of where they want to go, and when you invest in a company, it's good to see that management is confident and has a clear perspective of where they want to be. So again, really good news. And then they want to obviously have the manufacturing capacity in Norway, Denmark and US as they have, and they want to do expansion in key markets which is close to customers. So they do not have anything in Southeast Asia as of today, but that could potentially be an opportunity because they both have offices in both China and South Korea. And they want to establish representative offices in several additional countries. Australia could perhaps be a good option because they also have very ambitious hydrogen plans in the future. There's a lot of areas where it would make sense for NEL to expand their business presence. So again, overall, a quick run through, but we are very happy to see that they have a clear plan of where they want to be and they know what they need to do to be able to get there. So again, we are pretty positive about NEL from what we have analyzed so far. It looks like a really strong and solid company. So some of the pros and cons. So we've just listed some of them here, but we actually see a lot of pros with NEL as of today. But one of the things that we like is that they have in-house technology. They have the full value chain control. They are there from the sale is happening to the commissioning and servicing of their products. So they therefore get a tight and close relationship with their customers, and they are ensuring that the Q&A is done throughout the process. That's something that we really like. They have the world's largest manufacturing capacity as of today, and part of it is still unused. So although they want to do capacity expansion at the Norwegian facilities in Denmark and the US, it seems like they have a lot more capacity, so they don't need to spend money on that, which is obviously good. It's not good to have a facility that is not running on 100%, but hopefully that has come with all the deals that they are signing in the most recent quarter and during 2020. They have a strong balance sheet, as we mentioned several times. They had a strong 2020 Q4 contract awards and 2020 in general, and they had consistent revenue growth in the past years. What are some of the cons, or maybe perhaps more risk related? Well, basically the competition within hydrogen is increasing and will increase in the future. So there's definitely going to be new entrants that can threat the position that NEL has as of today. They are competing with battery technology, and hydrogen may not win in the end. It's going to be very interesting to see whether they can come down with the cost on hydrogen side, because that will be the key enabler to have success against battery technology in many areas. And again, related to that, they're still not cost competitive. They also have a relatively high price to sales ratio. However, we would say on that one that the backlog has seriously gone up in the recent quarter, and we expect that they will announce more deals as we move along in 2020. So the price to sales ratios should, from a future perspective, perhaps come down a bit. But again, the share price is not cheap as of today, and they are in certain cases still very dependent on subsidies to gain contract awards. And again, there's very ambitious hydrogen plans across the globe. Let's see if they're going to materialize. It may come at a halt. You never know what's going to happen. Right now there's momentum, but NEL and other hydrogen companies cannot really survive without this, simply because it's such an expensive technology still compared to other alternatives. And obviously there's no guarantees that the technological development will continue in the future. It looks promising so far, and as we have mentioned several times, NEL seems to know where they want to go with their alkaline business, with their PM, and also with their refueling station. So we are quite confident, but there's no guarantees that it will be sufficient to be able to compete with other technologies who are at the same time also developing and becoming better and better. So what is the verdict of NEL? First, we want to say that as of today, we have done quite a few other hydrogen company analysis. As you can see, some of them here, not all of them. But if you haven't checked them out, we would definitely urge you to have a look at them, because they can give you a deeper insight into the industry. We have also benchmarked on a very high level the different companies where we have done individual analysis of fuel cell energy, Plug Power and Bloom Energy, and of course we are today going to add NEL. So what we want to say about them is obviously that they're very established in hydrogen. They have a relative, not crazy, but relative broad portfolio. They're focusing on electrolyzer and hydrogen for industrial, but also consumers. They are depending on subsidies, but we don't feel they are as dependent as some of the other ones are. We feel that they could actually better thrive than some of the others that we have analyzed. They're present obviously heavily in Europe, the US, but also in Southeast Asia, and they want to expand this further. They have had really strong growth in recent years. The stock is currently traded on future expectation, but we would say that we actually think that they can live up to a lot of the expectations that is set out. Well, overall, the world is obviously transitioning from fossil fuels to renewable energy. One of the disadvantages of some of the more known sources like wind and solar is that it is still an unstable way of energy delivery. And this is one of the areas where hydrogen electrolyzers could come into play as an alternative. And NEL solution can generate this, especially when there's too much renewable energy available. And what is the good thing as well is that NEL can store it. So they have some other advantages. They have local production of hydrogen, and they have also the ability to scale its solutions up. That is one of the key objectives. And the hydrogen production in itself is obviously safe, it's clean, and it's relatively cost efficient. It obviously needs to improve a lot more, but it is definitely going down slowly, as we have seen in the two videos that we have covered. The share price of NEL has risen pretty quickly in the last couple of years, and obviously hydrogen has gotten a lot of hype, and that has pulled a lot of companies up. The stock price rose while the revenue increased, but not at the same pace, which in our opinion makes NEL still an expensive option as of today. The price sales ratio is still above 80, as we show in our recent top 4 video, and when having such a high price sales ratio, we are just a bit concerned as whether it's a good time to move in. We would say the flip side of that, as we saw in Q4, they had a lot of announcements and they may continue in the next quarters. That is definitely something that we're going to keep an eye out, because if that happens, revenue will grow fast, and therefore it may still actually even today be a good time to go into the stock. We're going to follow this very closely, because we think it's one of the best hydrogen stocks that we have looked at as of now. However, we just need to acknowledge that it looks a bit expensive overall still, and there are obviously risk associated with investing in a hydrogen company. So it's not clear whether they will become profitable in the end of the day, even though they have the set target of 2025. It could take a lot longer time if they need to continue investing in people and technology. But we still think that they're on the right path to get towards profitability. And in the end of the day, that's what really matters. Does this then justify the share price as of today? Perhaps no. That's why we are probably not jumping in, even though we really like the company. However, I mean, the hydrogen sector just has a huge momentum right now, similar to the renewable energy. And this could obviously last for a while. It's kind of like we have been thinking for a long time, now it's getting too crazy with some of these stocks. They may need to do a pullback, but they just seems to keep increasing. So again, it could be that the chance will never come of buying NEL at these prices, but we gotta, listen to our gut feeling about it, and we think that there may come a better opportunity in the future, and that's why we're gonna stick out and wait, despite really liking the stock. Well, that was all we had for today. We really hope you enjoyed this video. Please subscribe for future content. Please give us a like. It really helps with the algorithm. And please give us a comment in the comment section. We know some of you have a lot of understanding and knowledge about these companies, and we think it's good for the community if you share your input, because it helps us take much better investment decisions. Please keep in mind that we are not professional financial advisors, and this is only done for entertainment purposes. You need to do your own due diligence before taking an active investment decision. Don't just listen to all the hype here on YouTube. Really do your own due diligence, because otherwise you're gonna get burned at a certain point. This was all we had for today. Have a great day. Stay safe. Hasta la vista, baby.